Hello friends. Now let's discuss about the economic events. In economic events, now from where we got this term you might have cleared, because we have just right now discussed about the meaning, right? The meaning or definition given by AICPA, AAA, when we have come across these terms. Now we should understand what are these terms, why are these terms used in our definition. Each and every term has its importance. So let's understand what is economic events. And economic events is known as a happening of consequence to a business organization, which consists of transactions and which are measurable in monetary terms. That means the economic events, what is that? It's a cause that is happening inside a business organization, and it should include some transaction. Transaction means some kind of transaction should be held inside the company, and that should be also measurable in terms of money. Transaction is happening means there should be a cause of money. Example, we can take the machinery purchase of machinery, installing and keeping it ready for manufacturing. It is an event. What are the financial transactions that will be involved in the purchase of machinery? In the purchase of machinery, the transactions that will be in financial character is a buying a machine. Obviously, buying a machine we need money. Transportation, to bring the machine to the company site or where the machine will be kept. For bringing up to that place, we need to pay the transportation cost. Again, after bringing it, we have to see the site preparation for installation, where the machine will be installed. That site preparation we have to do. For that also expenditure is required. Expenditure also incurred on its installation. Obviously, while installing, you need to make some expenditures, some fittings and everything. That all things need some expenditures, and after that you have to go also for a trial run, whether it's working properly or not. But that also there is an expenditure. So all these things where the you can see only we have bought a machine, but in that we involve many steps. So all these are, each and every aspect involved in this are the of financial character. They are measured in monetary terms. So each and every things comes under your economic events. Now after economic, we should also understand the types of economic events. There are two types of economic events. Let's focus on that: internal and external. Internal economic events, which will be between the internal wings of an enterprise. It is within the organization, like supply of raw materials or components by store department to manufacturing department, or some payment of wages to the employees, etc. Means within organization, whatever transactions are held, all those are your internal economic events. But if you talk about the external, it is obviously which is not there within, which is outside the organization going on. An outsider and an organization, what are the transactions or what are the things going on, the events going on, those are your external events. So like sale of merchandise to the customers, the things are we are going to pay, sell it to a customer. Customers are outsiders. That is the first important and also an external event. Rendering services to the customers, if you are giving some service to the customers, that is also external. But if you are not directly giving that, rather giving by some other company, ABC Limited, then it's an external communication. You are dealing with external efforts. Now purchase of materials from suppliers, you are buying something from the suppliers, you are depending on the suppliers. Suppliers are the external things. Payment of monthly rent to the landlord, you belong to that land, is not yours, you are on rent, you have to pay the rent to the landlord, right? That is also an external economic events. Now after we are clear with economic events, let's try to understand all these four aspects: identification, measurement, recording and communication. Identification, it means determining what transactions to record. You have to identify which transactions you have to record. You have to determine that. So that is to identify events which are to be recorded. So it involves some certain steps, involves observing the activities. You have to observe the activities. You have to select those events that are of financial character. Then you have to relate to the organization. And then after doing all these things, you have to separate it out. These are the identified transactions. Right? Example, you can see the value of human resources, changes in some policies, appointment of some personnel. These won't be recorded because here it is not coming under your financial character. Next, purchase or sale, payment of salary. This all includes your what? Money. Money is involved in these things. So this will be recorded. So this is all about your identification.